Hey, have you seen the latest earnings report for Engineers India Limited or EIL? Looks like they've released their Q3 results for fiscal year 2024-2025.
Oh, yeah, I did a quick glance. EIL, right? Aren't they the ones who provide engineering and consultancy services, especially in the oil and gas sector? They also do a bit in infrastructure and other industries, right?
Exactly, they're pretty big in that space. And from what I gathered, this presentation they're looking at is to give investors a highlight of their financial performance. So, what's the top line summary from your end?
All right. So EIL does both consultancy and turnkey projects, which, are basically end-to-end project execution. Looking at Q3, the consultancy brought in rupees 4,067.9 million and turnkey added rupees 3,433.72 million. Total, that is around rupees 7,501.62 million, which is higher than the previous quarters. And they've also got some other income bumping up their total.
Other income, huh? Always good to have a little extra cushion. So, how does that translate to actual profit? Are they raking in the dough?
Well, their segment profit for consultancy was rupees 1,047.98 million and turnkey was rupees 1,089.20 million. So overall, their total profit was rupees 1,237.18 million. Not bad at all.
Not bad indeed. So, any idea how this quarter stacks up against their performance over the last 9 months? Like, is this a consistent trend or are we seeing peaks and valleys?
Okay, digging into the 9-month numbers, their consultancy business brought in rupees 11,362.94 million and turnkey added rupees 9,009.24 million. The consultancy segment profit was rupees 2,310.89 million and turnkey was rupees 566.10 million.
So, consultancy is definitely pulling more weight in terms of profit. Are the overall numbers better or worse than last year?
Well, actually, their total income for the first 9 months is down compared to last year. They clocked in rupees 21,649.09 million this year compared to rupees 26,103.69 million last year. Profit after tax or PAT is also down, rupees 2,220.04 million versus rupees 2,060.52 million. So there's a bit of a dip there. Earnings per share also saw a decrease, coming in at rupees 3.95 compared to rupees 4.73 last year. It's interesting to see how the numbers fluctuate.
Interesting indeed. So, what's driving this dip? Is it a slowdown in projects, increased costs, or something else entirely?
It's hard to say definitively without digging deeper, but I guess it could be a mix of factors: project timelines, market conditions, maybe even some increased expenses. You know how these things go, right? It's a complex interplay of different elements.
True, true. So, before we go any further, if you are enjoying this analysis, don't forget to like, share, and subscribe to our channel for more insights.
Absolutely. And now, about EIL, what about their order book and new business? Are they still getting new projects or is the pipeline drying up?
Good question. So, new business is crucial for future growth.
Yeah, for sure. In Q3, they secured rupees 2,683 million in consultancy and rupees 16,101 million in turnkey projects. Looking at the 9-month figures, that's rupees 31,311 million in consultancy and rupees 38,841 million in turnkey.
Okay, so they're still winning new projects. How does that translate to their overall order book?
As of December 2024, their total order book stands at rupees 113,524 million. Consultancy makes up rupees 55,538 million and turnkey is at rupees 57,986 million. Seems like they've got a healthy backlog of work to keep them busy.
That's a solid order book. Gives them some visibility for the next few quarters. Any idea where these new orders are coming from? Like, are they mostly domestic or overseas?
Well, for the 9 months ended in fiscal year 2024-25, 89% of their consultancy orders are domestic and 11% are overseas. In terms of the sectors, hydrocarbons dominate with 92.34% of the consultancy orders.
Hydrocarbons still king, huh? Makes sense given their history. So, Any interesting projects they've snagged recently? Anything that stands out?
Yeah, there are a few that caught my eye. They bagged a domestic LSTK project, which is valued at 3,400 million with ONGC to construct infrastructure works at one basin in Vadodara. This project is expected to complete around September 2027.
ONGC is a major player. Definitely a good win for them.
Absolutely. They also have an overseas consultancy project for the Fujairah oil tanker terminal in the UAE that's worth rupees 155 million and should be completed by December 2027.
Diversifying their portfolio, I see. So, what about the recent orders secured in Q2 FY 24-25?
Okay, so digging in, one notable domestic consultancy project is with ONGC, valued at rupees 263 million for reviewing engineering documents. In overseas, a significant project involves consultancy services for feed development for Kuwait National Petroleum Company worth rupees 230 million.
Diversifying across regions. I like it. Now, how about Q1 FY 24-25?
In Q1, one major domestic project was with Munitions India Limited for the execution of TNT plant at Heath Fatki, valued at rupees 4,182 million. Overseas, they secured a PMC services project for ODUM Energy FZE in Nigeria, worth rupees 717 million.
Nigeria and munitions, quite a diverse range of projects.
Yeah, it shows they're not just relying on oil and gas. So, I mean, with all these projects and financials, what's your take on this Engineers India Limited performance?
Well, considering everything, I think they're holding steady, but there are definitely some areas to watch. The dip in total income and PAT is a bit concerning, but their healthy order book suggests they're still competitive in the market.
I agree. Diversification into different sectors and geographies seems to be a smart move to mitigate risks. Their dependency on hydrocarbons is still quite high.
Definitely. Speaking of long-term moves, I saw that they've made some capital investments, right? What's the deal with those?
Yes, their capital investments. They've got stakes in the Ramagundam fertilizer project, some upstream assets, and Numaliga Refinery Ltd. They've invested rupees 491 crore in the fertilizer project and a significant amount in Numaliga Refinery.
So they're putting their money into some pretty diverse areas. Fertilizer, oil, energy. It looks like they're trying to spread their bets.
Exactly. It's all about long-term growth and stability, right? They're really trying to move away from being just a pure play oil and gas company.
Makes sense. It's like learning to adapt a recipe when you're missing some key ingredients. Now, have they announced any dividends?
Yes, actually, the board declared an interim dividend of rupees 2 per share. The record date to be eligible for this dividend is February 14th, 2025, and the dividend will be paid out starting March 3rd, 2025.
Okay, so investors who hold the stock by February 14th will get that dividend. Good to know. What is the impact of the record date?
Well, it's good to note that the record date basically determines who is eligible to receive the dividend. The record date is crucial as it determines which shareholders are entitled to receive the declared dividend.
Okay, that's good news for shareholders. Always nice to get a little something back.
For sure, it's a good sign that they're confident enough in their financial position to distribute some of the profits.
Absolutely. So, summing it up, EIL seems to be navigating a complex environment. What would you say is the key takeaway for investors?
I'd say keep an eye on their ability to maintain a strong order book and diversify their revenue streams. The dividend declaration is a positive signal, but it's crucial to consider the impact of various market risks on their business activities. Oh, and one more thing, disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Solid advice. And thanks for breaking down all those numbers for us. It's been enlightening.
Anytime, I think it gives a broad picture of where they stand and where they might be headed.